So those were the top headlines today in the world of startup. But let's look at what important news flow is actually coming in from the world of startup as well. Now, according to some of the reports that have come in, it is suggested that India ranks at 4th in the world in terms of the number of scale-ups that they've seen, or startups have actually received more than $15 million of disclosed VC investments. Let's go across to Lisa, who is here, who's read up on all these reports that have come in, to tell us what is it that is indicating India is at number 4, what does this mean for the country as well, and what is it that the report suggests. Lisa?
Well, according to a report by Startup Genome, which is an innovation policy advisory and research firm, according to them, India ranks 4th in the world for startups that have received more than $50 million of venture capital investments. Now, the first edition of the report says that there are 12,400 such startups in the world, of which 429 are from India itself, and the first position was held by US with around 7,184 such startups, followed by China with 1,491 startups and the UK with 623 startups. Now, they have surveyed startups in across 80 cities, more than 40 countries, and looked at 60 plus metrics, and they have concluded that India has recorded 429 scale-ups with a VC investments of around $127 billion and a total value of tech investments which was around $446 billion. Now, they also added that India has startups with 50% or more of their customers coming in from outside the continent, and this can be partly attributed to startups that tailor their product services to global markets. So this was on the update on startups coming in from Startups Genome.
Thank you so much for that, Lisa. And obviously, that was on the global front where India stands in terms of the ranking according to the report. But let's go more domestic. Let's talk about the Indian ecosystem that has come in. And we have an exciting report that is coming from Tracxn in terms of the startup world in Q3. What is happening in terms of the trends there, investors, exits, how is it looking like? We are joined today by Neha Singh, co-founder and CEO at Tracxn, who's going to be talking to us about all these details and what the reports and what have they picked up in terms of the trends there. Neha, thank you so much for joining in with us this evening on ET Now. I'm going to start with the key findings you have for your report. I was going through it, a lot of interesting ones. If you could just give us some more detail and color in terms of the what reports are suggesting, what are the key findings that you have?
Yeah, so we recently released the Q3 funding report for India Tech. And just to summarize some of the key highlights, Q3 saw funding of nearly 1.5 billion, which is actually a drop both sequentially on a Q-on-Q basis as well as on a year-on-year basis. So sequentially, it is a drop of about 30% on a Q-on-Q basis, and on a year-on-year basis, which is if you're comparing same Q3 to the last year, calendar year Q3, this is nearly a 50% drop. So, sort of the funding winter sort of continues. And if you look at this quarter, this is one of the least funded quarters in the last 5 years. And if Q4 of this year continues to see the same level of activity as the first 3 quarters have seen, then this calendar year 2023 will end up being one of the lowest funded across the last 7-year period, right? I think just to note a couple of points, it's not just an India phenomena, and this is the similar trend that you're seeing globally. India continues to be one of the top 5 largest funded geographies. So that is, it continues to maintain that ranking. But I guess this is in line with the global sort of the slowdown that you're seeing.
Then how long do you think this funding winter is actually going to last? When will it actually end? When will we see a turnaround now?
Right. No, so that's a good question. And, investors have been discussing about that for a few months now. So if you see a little bit more on a granular level, the data which is there. So if you see on a month-on-month trend, the last month was the fag end of the Q3 actually saw an uptick in terms of the investment activity. So if you look at the last month, which is September, this was actually higher than the previous month by 90%. So that's a very healthy growth that you're seeing in terms of activity. Also, when you talk to investors on the early stage, you're seeing investors getting more active in terms of the number of deals that they are doing. Though the deal sizes have reduced, so maybe earlier the early stage deals like a seed or a pre-series A was getting done at between 3 to 5 million. Now it is closer to 1 million. So the deal sizes have reduced, but the deal activity has, picked up. So this is something that we hear across. And you're also seeing some of the large rounds happen, right? Like you saw some of the large $100 million plus rounds happen in companies like a Perfios or a Zepto or an Ola Electric or an Ather, which is sort of fairly healthy, which saw, and this, earlier this year saw much lesser of those. So looks like there is early signs that investment activity is picking up. Maybe we'll have to wait it out to see for a few more months if this continues.
Let's talk about some of the important sectors, right, Neha? Then, which are the sectors that are seeing acceleration in fundraising, in funding, as well as which are the sectors that are seeing deceleration in fundraising?
Right. So obviously there were some sectors which had seen acceleration during the COVID time. That continues to be a little slow, but there are some other sectors which have started picking up. So fintech continues to be one sort of evergreen sector which continues to see activity. There is a more interest in investing in sectors like EV, and you also saw deals happening in those sectors. So a lot of companies or investors are also looking at opportunities within that. AI continues to be one area of interest that all the investors are looking at companies in, because that's like a massive wave which is spanning across industries. India hasn't seen a lot of AI deals, but there is a lot of interest from investors, and they continue to be very watchful on the companies coming up in this space.
Now, I just want to understand this. So, what is the main reason behind this funding winter that we've seen since last festive season ending? Then we have seen this funding winter start. So, what is the main reason behind this funding winter?
Right. So it is a combination of both of them. One is obviously now that the interest rates are, have become much higher than what they were 2 years ago. And the belief is that they will remain high for an extended period of time. So there is more focus on profitability. So earlier, when growth at all cost was getting rewarded, I think now there is more focus on companies becoming profitable. And this is a thing that you see both in the public markets as well as in the private markets. Like you saw a similar trend happening in the public tech stocks. That was down a lot last year. This year, it has been up. You saw that on NASDAQ. And you're seeing similar trend also in the private stocks. So investors, are talking at the board meetings. One of the common topics of discussion is, when is the company going to sort of hit profitability? And also from the company's perspective, right now, a lot more founders are talking about the fact that they are going to become profitable, in a few quarters or in a known amount of time. So I think it's a combination of higher interest rate as well as just the amount of capital that was available, and some of the late stage investors becoming much slower globally, and less capital going to be available for at least the next 1 year or so. So people are also focusing on becoming profitable much earlier than what they were planning maybe 2 years back.
So, what we're seeing is a lot of promoters are exiting, a lot of promoter exits that have come in as well. Is that a broad-based trend that you're seeing?
So yes, that has been happening. And if you look at the stats, the stats do say it's one of the times wherein you saw most selling from these group of investors. But having said that, I think it's a combination. Like obviously, when people perceive that the markets are high at a peak, then there's more amount of selling which is happening. But I guess when you talk to a lot of investors, people are very sold on the India story as well, and people do see there is continued growth opportunities, at least, which is going to be there in India for longer. And people are still saying that it's not that you see different set of opinions, that it may not be like the peak, and the growth may sort of continue. So I would not sort of have put that there is a definite trend or investors are seeing it a market to be the peak.
Energy transition, right? That's the big theme that is coming into play. And is it a big theme, if you could say, for PE players? Are they latching onto it as well?
Definitely. So that's definitely one of the areas of interest, which is there, on the private side as well. And you saw a lot of deals also happening. And this is both supported by, a lot of initiatives, obviously, that were done by the government, as well as companies are coming up in this space. And I think it is becoming more and more affordable. So you saw, both Ula Electric, Ether Energy raise rounds during this period. And, even from the investors' perspective, there continues to be sort of interest in looking at more opportunities in this space.
So this funding winter, is it only the late stage that funding winter we're seeing? Because that was a trend that was there as well, right? Before the late stage funding was a bit lower, or is it even in seed funding too that we're seeing a funding winter now?
Right. So this is across the stages. Earlier, we saw that the late stage were impacted more by the funding winters because a lot of the global hedge funds and large funds like SoftBank, etc., which were very active on the late stage, then becoming a bit slower. So earlier, a few quarters back, you saw the late stage impact being more than the early stage. Right now, it's across. So I would say the early stage, if you look at just in terms of the dollar invested, there is also decline which is there on the early stage as much as or slightly lesser to what it is there in the late stage. But having said that, on the early stage, the positive side is that the deals are still happening. If you look at the number of deals, that is still happening, but the quantum of the deals have become smaller. So that is why the overall dollar invested is slightly lower. So you see impact, across both the buckets, but I would say maybe on the later stage, there is more impact because a lot of the global funds which were active in this stage have become much lesser active recently.
Neha, if you could just talk to us about the top investors this quarter. Who's putting in the money? Who are the investors over there?
So from the investor perspective, it is the usual suspects. On the early side, you have funds like Peak 15 or Elevation or Excel being active on the early stage. On the later stage side, you actually see a different set of investors. So earlier you saw like a Tiger or a SoftBank being very active on the later stage. Right now you are seeing them lesser active, and actually a new set of funds which are becoming more active on the later stage. So I think that has changed. In the early stage, the names have not changed. Probably the names are sort of the same set.
Yeah, in the recent times, haven't we been seeing a lot of consolidation in terms of the merger and acquisition activities that have picked up pace as well? What is your reading on this?
So that is correct. So M&A activity has been slower than what it was during the peak, but it has started picking up a little bit because there is also, as you rightly said, there's also a little bit of consolidation which has started to happen because not every startup is having the runway to see to wait for the next funding round. So you also see some sort of opportunistic acquisitions or some sort of consolidation also starting to happen.
Yeah, lastly, if you could just tell us which are these cities that are actually leading the startup race now?
So interestingly, it continues to be Bangalore as the top invested city in terms of dollar invested, and followed by Mumbai and then NCR.
Okay, Neha, thank you so much for joining in with us this evening on ET Now on Startup Central, giving us a view on how the Indian ecosystem is doing in terms of the startup. Where are we seeing the funding? Where are the investors actually looking at? What is piquing their interest? Very exciting chat that we had with you. Thank you so much, Neha, for joining in with us. So that was Neha Singh, CEO and co-founder at Tracxn.